All right, let's talk about money. There is so much financial advice out there, right? It's just noise. Today, we're cutting through all of that. We're going to give you 10, just 10, core lessons. And the best part? We'll build them into a super simple system you can start using like today to totally transform your finances.
You know that feeling when you think about managing your money and it just feels overwhelming? Yeah, you're not alone. But here's the thought. What if building wealth isn't some secret, complicated formula that only gurus know? What if it's really just about mastering a few basic, fundamental ideas? Well, that's exactly what we're going to dive into.
So, to make sure these lessons actually stick with you, we've broken them down into a really clear three-part framework. It's simple: the mindset, the habits, and the strategy. By the time we're done here, you're going to have a complete blueprint, a real game plan for your financial future.
Okay, let's kick things off with part one, the wealth mindset. And this is so important because honestly, before you can even think about growing your money, you've got to get your head in the right space. Real financial progress, it starts right up here, in your mind, not with the numbers on a screen.
All right, let's talk about the absolute foundation, the bedrock of a solid wealth mindset. It's this idea of delayed gratification. Think of it like a superpower. Seriously, it's the ability to say no to a small treat now so you can get a massive reward later. And it's not just about gritting your teeth and having willpower. It's about making a deal with your future self, making choices today that the you 10, 20 years from now will be so thankful for. And when it comes to investing, this is everything. Letting your money compound for decades, that's the ultimate prize for being patient.
Okay, so how do you actually do this in real life, day to day? Well, here's a fantastic, super practical rule of thumb. Let's say you're eyeing a new $500 gaming console. Ask yourself this: could I buy it twice? If the thought of dropping $1,000 on it makes your stomach churn a little, well, you probably can't really afford that $500 purchase just yet. It's such a simple but powerful gut check, right?
And you know, this whole long-term thinking thing, it's not just about stuff you buy. Think about your career for a second. Let's say you have two job offers. One pays more right now. The other pays less, but you just know it's going to be way more fulfilling and lead to better things in, say, 10 or 20 years. Which one do you take? That's the real test. A bigger paycheck today just isn't worth it if you're going to be miserable down the road.
Now let's talk about one of the biggest mindset traps out there, the comparison game. It is so dangerous. It's what leads to this thing called the 30K millionaire. You've probably seen them. It's someone who looks super wealthy on social media, has all the nice things, but behind the scenes, they're probably just drowning in debt to keep up that image. They care more about looking rich than actually being rich.
And that brings us to this incredibly powerful quote from the classic book, The Millionaire Next Door. It really boils it all down. If your goal is just to be financially secure, you'll probably get there. But if your goal is to make money just so you can spend it on the flashy good life, you're never going to make it. Real wealth, the kind that lasts, is built by living below your means and focusing on security. That's how the actual millionaires do it.
All right, so we've got the mindset down. Now let's roll into part two. With that solid foundation, it's time to build the engine that's going to drive your financial growth. And that engine is your habits. We're talking about the concrete, repeatable actions that make building wealth feel, well, almost automatic.
And look, you don't need some insane, complicated spreadsheet with a million tabs. No. You just need to focus on three key numbers. We'll call them the big three. First up, your expenses, so you actually know where your money is going. Second, your savings rate. This is your #1 growth engine. And third, your net worth. Think of that as the ultimate scoreboard. It's what tells you if you're winning the long game.
Okay, now let's talk about saving. There is one period in your life when saving matters more than any other time. And that is right at the very beginning. When you are just starting out, your most powerful weapon isn't some secret stock pick. It's just saving. Saving relentlessly, every single dollar you can, to build that first chunk of money.
And check this out. The numbers don't lie. When we look at what it takes to get to your first $100,000, a whopping 77% of that money comes straight from your savings. Yeah, investment returns chip in, they help a bit, but it's your own discipline that does all the real heavy lifting at the start.
Okay, here we go. On to our final piece of the puzzle. Part 3, a simple winning strategy. So you've got the mindset, you're building the habits. Now you just need a smart plan for investing that you can actually stick with for the long haul. And here's the secret. You ready? Simpler is better. In fact, boring is better.
You know, a really common mistake people make is thinking they need like a dozen different funds and stocks to be diversified. But actually, over-diversifying is a huge problem. People end up buying a whole bunch of different ETFs, and they create this portfolio that's not only confusing, but as you're about to see, it's not nearly as diversified as they think it is.
Okay, check out this perfect example. Let's say you buy VOO, which is a big S&P 500 fund, and then you also buy VOOE, which is a mid-cap value fund. You're thinking, great, I'm spreading my risk. But here's the catch. In reality, over 92% of what's in VOOE is already inside of VOO, so you haven't diversified at all.
So what's the goal then, right? Well, this quote from the author Morgan Housel, it completely reframes the whole game. He says, don't try to beat the market. Your goal isn't to be a genius stock picker. Your goal is endurance, just staying in the game. If you can earn totally average returns, but do it for an above average amount of time, you will end up as a top-tier investor. It's that simple.
And this chart shows exactly why that endurance strategy works. Just look at the history. If you invested in US stocks and just held on for any 20-year period, any of them, your chance of losing money was zero. Zilch, nada. Time is the single greatest tool you have to reduce risk in the market. The longer you hold on, the more of a sure thing it becomes.
Okay, one last critical point on strategy, and this is a big one. You have to stop borrowing money for things that lose value. I'm talking about stuff like cars, jewelry, furniture, even the new smartphone. When you finance something that depreciates, you are literally paying extra money in the form of interest just for the privilege of losing money. It is one of the absolute fastest ways.
All right, so let's bring it all home. We've walked through the mindset, we've talked about the habits, and we've laid out the strategy. This is it. This is your complete blueprint for financial success.
So here it is, your whole three-part system in a nutshell. First, you build the mindset. You learn to delay gratification, and you tune out all the noise. That mindset then fuels your habits, tracking your numbers, saving like crazy. And finally, those rock-solid habits let you stick to a simple, boring, long-term strategy. See how it works? Each piece builds on the next, creating this powerful engine for building real wealth.
You know, the best part about this whole system is just how simple it is. You don't need a PhD in finance to do this. You just need to take action. So that brings us to the only question that really matters right now. What's the very first step you're going to take today?
If you liked our video, then subscribe to the channel, like the video, and be sure to tell us in the comments how you liked our video.